Hey everyone, in this video we're going to be looking at the Chapter 7 homework, and let's dive in. Okay, so we have 9 questions to look at here in Chapter 7, and we're going to look at different bank reconciliation problems, etc. And so here we've got a listing of different types of reconciling items that you might see, and we need to figure out whether this is going to be an addition or a deduction. We're going to add it or deduct it from the bank or the book side. So kind of two to first, is it bank or book? And then is it add or subtract? Okay, so interest deposited to the company's account. So remember, that would be on the bank statement. The bank is the one depositing that interest, so it already includes it. But you, as on the book side, we had only record it. We're going to say when we look at the bank statement. So we're going to need to add that to the ledger balance. NSF checks returned, so these are like bounce checks, remember? And so the bounce checks, remember, we thought the customer paid us essentially, but they didn't. And so we've got to add that amount, or sorry, we got to deduct that from the balance of our ledger because we thought we had the cash. In reality, we did not. Okay, deposits that are not shown on the bank statement. So these are deposits in transit, and those are already in the books, but they're not yet on the bank statement, and it's just a timing issue until those deposits are processed. Okay, bank service charges, similar to the interest that adds to our book balance. The bank service charge is going to deduct from our book balance, so we need to have that deducted from the balance of the ledger. Outstanding checks, we have written them, they haven't processed through the bank yet, so that's going to deduct from the balance of the bank statement. Okay, 100%, great. Let's move on to the next one. Okay, question number 2. Question number 2 says, the following data represents information to prepare our bank reconciliation. And so then we've got the journal entries and the bank rec here. Okay. So on March 31st, the bank balance was $53.44, and the book balance was $6,771. Okay, and let's go through and look at our items. The bank statement indicated a deduction for $23 for service charges. So let's do 23, no negative signs, it says. Okay, so even if it's a deduction, it reduces. We don't use a negative sign. Okay, a customer deposited $1,120 directly in the bank account to settle an outstanding AR bill. So that's going to be an addition that we got cash we just didn't know about until we looked at our bank statement. Check 563 and 570 are in the ledger, but not on the bank statement. So it sounds like those are, it's a check. So that should be our, oh, here we go. It tells us even we have it's outstanding checks. So 563 would be 600, and then the 420 for check number 570. A customer paid an amount of 4,486, but the deposit didn't appear, so that's an outstanding deposit. Okay, let's see. The accounting clerk made an error and recorded a $170 check as $1,700, and the check was written to pay an outstanding accounts payable. So on the book side, we went too far down, so we need to add back, if you want to think of it that way, to the cash balance to get it to 170. So the difference between 1,700 and 170 is 1,530. And that's going to add our cash balance back to bring, the error brought it down 1,700 cash down. We need to increase cash balance so it's accurate up to 170. So the difference between those two is 1,530, as we've got here. Okay, check 6489 for 120 was deducted from so the bank made a mistake and processed the check on our account. But this check was not written by us, and it needs to be reversed by the bank, so that's a bank error. So that total amount just needs to be added back to the bank side. we don't have to take, the difference because it's just the whole thing was wrong. So this bank balance here shows this coming out, but that was an error. So they need to add it back in once we tell the bank. There's a non-sufficient funds check in the amount of $460 related to a customer's payment, and there was a fee of $8 with that. So the NSF check is going to be a reduction. Oh, I put the bank service charge in the NSF service charge spot. So this is going to be, we thought we had cash. So this was originally a cash transaction recorded here, but then it goes to the bank and the bank says, nope, that was a bounce check. So you're not going to get it. Okay, the GL, okay, that was just our starting point there. Let's add our amounts here. So we get 4606 by just adding those two. This will be 1020. Let's do this is 2650. And then add all three of these, gets 491. Okay, and then our total adjusted bank balance, I got 8930. So our beginning unreconciled balance plus the additions minus the deductions gets that number. And hopefully we get the same thing. Yep, 8930. Awesome. So that's great. And then we're going to want to record our journal entries. I typically like to just do 2 journal entries that includes all of the adjustments of cash up and cash down, but they like to break them out in the homework style here and in our book. So we're going to do it that way. It's fine. But we can just, we're just going to go one at a time. So bank chart. So remember, when we're booking journal entries, it's everything on the bank side, or not the bank side, the book side. And we're going to increase cash for these ones, and then we're going to decrease cash for these ones. So bank service charge is going to be bank charges expense. Again, we're reducing cash for that, 23. Collection of accounts receivable is cash going up and accounts receivable going down, right? Because we received that money. That was the EFT that we got deposited to us. To correct the record of accounts payable, so that was the 1530. It's an addition, so cash is going to go up, and accounts payables are offset, and that was 1530. NSF checks are always accounts receivable because we thought we had cash, but then the bank tells us, sorry, you do not. And finally, the NSF fee, I think we'll just bank charges expense works there, I believe. There's not a separate NSF fee account, I don't believe, unless I'm just missing it, but let's try that one. Bank charges. Yep, 100%. So there we go. Our account is reconciled. Okay, another similar problem. So it asks us to fill out the header on this one. Make sure I put that in the right order. Yep. Okay, so and then beyond that, it's going to be very similar. So our ending cash balance was 1,600. Oh, sorry, that's the bank for the bank statement. And the general ledger was 3154. And then we can see these differences here. So the bank returned an NSF check for 360 and was charged. We got charged 360. Again, those are reductions from our cash balance because we thought we had cash, but we actually didn't. A direct deposit, so like an EFT type situation again, was 3790. Had not yet been recorded by the company. Bank deposited money for interest. So interest, bank service charge. Oh, deposited money for interest. This is us earning interest. And then $32 for the bank service charge. And then deposits in transit with 4960. And we're looking good. So let's just add these together. So I got 6560. let's take a look here. 3154. And our total deductions is 400. Total additions of 3806. And when we add all of that together, hopefully it comes out the same. 6560, woohoo! That's always good. Okay, and then let's just do our journal entries here. So we collected on our accounts receivable. That was our EFT. We earned some interest, so that was cash earned and interest revenue. $16, big 16 bucks. We had NSF checks. Remember, that always goes to a receivable. Here's our, I'm just going to do this one now because we're doing the NSF at the same time. So this is the fee that the bank hits us with. And then the bank charges was 32. All right, 100%. Great. Let's move on to the next one. Okay, so this problem makes it a little bit more challenging, if you will, where it doesn't just tell you all of the things that are reconciling items, but instead it requires you to actually look at the bank statement and the ledger activity to find, the differences. And it gives us last month's adjusted reconciliation. And we're doing July. This is June, and so there might be some information here that's helpful to us when we're going through doing our reconciliation. So to begin, let's look here. Our ending balance per books for July is $42.90, and our ending balance per the bank is $54.91. And one thing I kind of like to do first is to go through and look and see. So what did we have on last? We had outstanding deposits, so we should see that. Yep, there's that. So that we don't see that on the same. That's a difference, but we already captured that difference in last month, so that was just a timing difference. And the 1,000 and the 540. Here's the 540. Check number 21 looks like it's still outstanding. So that one we'll go through at some point. And let's see. So we're going to have to still account for check number 21. Oh, it does tell. That helps us a little bit there by telling us. So check 21 is 540. And again, that was from 2 months ago, but it is still outstanding. So you don't, just because it was on last month doesn't mean it shouldn't be on this month. If it's still outstanding, it should still be on the reconciliation until it clears, essentially. And that's a good place where you look, and if it gets really old and it's been on there a long time, that's where you want to figure things out and contact the person who's supposed to get that check and maybe cancel the check or something. Here we can see check number 25. It's not clear on the bank statement, but it was written and shows on our cash balance. So let's excuse me, put that in. Okay, so we got 1680 and 5491 minus 1680 gives us 3811 for our adjusted bank balance. Okay, and our bank statement shows that we got $11 of interest deposited. We received an EFT payment of $920. So that's, oh no, that was our monthly rent expense. Scooby-Dooby-Doo. Let me think about that. Why is that? Oh, a deduction. Oh, it's on our bank statement. Sorry. Yeah, sometimes an electronic payment can be a reduction. A lot of times it's usually like in a receivable that a customer's paying us. But if we have like a recurring payment, maybe it just shows up on there and we don't know that it was paid till we see the bank statement, for example. And then a bank service charge of $30. It kind of helps us through these, even though it is a little more challenging in the fact that it just presents the different parts. but it still guides you to what should be there with the titles of the lines, essentially. Oh crap, I got 3351. Okay, I'm off somewhere. What did I miss? 920, 930, so that would be negative 350. We had 42, make sure I did the right. That's the ledger, 4290. Okay. Check 25, make sure I got these right. Yeah, that's 1140. That does not show up on there. But 5, that's 4290 plus 11. Plus 11 minus 920 minus 30 gets us 3351. Let me make sure I did this part right. 5491 minus 540 minus 1140. What's the difference here? 460. So what am I missing for? That was 460. 4290. 2150 was a deposit. Okay, that was there. And just making sure everything's looking good on here. Oh, maybe there's no. Deposit from July 27th. So this. Okay, that 2150 contains a check. Customer paid the original. Okay, so that's not here anymore. So that should be gone. EFT rent 920 and 30. That's the same thing we got every month. You can see it's just like recurring. We added our interest of $11. All right, I'm gonna hit the check button and just see. 540. What are we? Okay, so that all looks good. What is the 540 we're missing here? Check 21. Was that not the right number? Oh, dang it. Okay, I'm a dork. 540 plus 460 is 1,000. So yeah, that makes sense. Whoops. Okay, you guys probably saw that when I was doing the wrong thing there. I picked up check number 22 instead of 21. There we go. And then, oh yeah, this total should be different. So we end up with 2140. And I'm just going to go ahead and proactively put the total in, even though, because I know it should match to that. So there you go, 100%. So yeah, just be careful. Go back through, read it, all the spots, and double check all your inputs, basically, is the answer for that one. Okay, question number 5. Here's again a ledger, a bank statement. Here's some detail. Check numbers are always 3 digits, so this probably might tell us that there's if we see something, yeah, like look at this one here. This tells you that the bank processed a check through our account that's not our check, so that was an error on their side. Because our check numbers are always 3 digits. On July 16th, we purchased $387 worth of salon supplies, and that was check 777. Yeah, you can. Oh, look at this. So we bought $387 of supplies, but it looks like the bank has an error of it saying 783 instead of 387. So the bank, I believe, reduced our cash too far down. So it should have only gone down 387. Instead, it went down 783. And so the difference between those is 396 to correct it. So that's the 396. Says there's an outstanding deposit, 2,500 we made, shows up on the ledger, but the last deposit was 360. It's 2,500. that should be what, 28.96. And the cash balance per bank statement was 20.96 was. So similar. It's weird. That would lead us to 5. Oh, we have to check this. Oops. Check 778. So what's check 778? Check 778 is maybe an outstanding check, it looks like. So yeah, that is not cleared. We don't see that clearing the bank statement yet. So that's 810. So with those all together, I get 5072. So the beginning plus the addition minus the subtraction. Let's put our amounts in there. Okay, the ending ledger balance is 78.67. We've got some interest we earned, $24. Oh, is that? What the heck? Oh, that was a mistake in our ledger. I'm sorry, I did this part wrong. So the bank error is that they put the check to us. So we need to correct that then. Right, because this is not our check. So that gives us 4,600 there. Then the ledger error is that it was 387, which the bank had it right, but we had 783. So we need to add back on our side the 396. EFT, so a rent payment just automatically deducted. There's an NSF check here for 360. They charged us $12 because of that, and then the bank service charge is $29. Okay, now we just need to add everything together. Add and subtract, I guess I should say. So I got 6,776. And let's see what our additions combined. 420, which is the date today, plus 1110, 360, 12, and 29. I got 1511. All right, the moment of truth. So 7867 plus 420 minus 1511, 6776. All right, yeah, we match up there. Awesome. So now we're looking good. And yeah, correct the check error. So again, we're adding back to our cash balance because we made a mistake there and reduced our cash too much. The check was actually 387, but we did 783. We've got cash coming in for that interest we earned, $24. Cash going out for a rent payment of $1,110. Accounts receivable for a bounced check. That was $360. Charges, just bank service charges. $12 for this is specific to the NSF check, and then just the regular bank service charges. We're using the same expense account, but separating them out into two separate journal entries. Oh, we're missing one. Dang, what are we missing? Oh, I guess they want us to go to salon supplies. Yeah, okay. Maybe it's not accounts payable. That would be salon supplies then. You always got to kind of do a little detective work to see exactly what the error that if you made a check error, how did that go? And a lot of times it's AP, but sometimes they tell you to use a specific offset there. So salon supplies was the amount. Okay. So the next problem, question 6. Let's take All right, in chapter 7, we're not going to look at bank rec problems necessarily, but we're going to look at petty cash. And so, a reminder that petty cash is just kind of like cash on hand at a business for small purchases. And let's take a look. So, we decided to use the petty cash, and so we took money out of our primary bank account of $145 essentially. And here it says we gave it to the store supervisor. They're the one in charge of overseeing the petty cash fund there. And we need to obtain authorized vouchers. So you should have some paperwork to go with any purchase, including receipts and all that kind of stuff. And petty cash will be replenished when the cash reaches $20. And okay, so the first thing is just setting up the fund, and that's really just taking the cash from our primary cash account of 145 and then putting it into this petty cash fund. So just moving one asset to another asset account. And then, okay, so then on May 19th, the summary was prepared, and we're going to need to replenish our cash amount. So we had advertising expense of $46. So it'd be like we're like looking through the receipts or the vouchers, and we would know what the cash was taken for, essentially. So we're just recording all the accounting related to that right now. Postage 23, and that totals to 125. And so we're taking money out of our cash account, our primary cash account again, and putting that back into the box, and then just recording the expenses that went along with the usage of the cash in the first place. And then finally, we increased the amount from 145 to 200. So we did a $55 check. And so whenever we increase petty cash, we just do the same transaction as we did to establish it. So we're just bumping it up by $55. And we should be good to go. Cool, 100%. Awesome. Okay, next problem. Another petty cash problem. So in this one, we're doing 250. So let's do that first entry just to establish the fund. Okay, that's great. And then here's the transactions that when we're going to be replenishing it. So we just need to go through and put in all these expenses here. Postage expense, supplies expense. See if we got everything in there. So 21.3. Delivery expense of 56.48. 40.76. And that totals, add all those numbers up. So the sum of all the transactions that we have tickets for in the box comes out to $226. Our amount is $250. And okay, so we had 226. Let's see, does it tell us? Sometimes we do this cash over in short if we have an amount that we can't reconcile, but I think, why is this not? Oh, that's annoying. I got to enter them in alphabetical order. Well, why is this not? Why is that not working? What the heck? To replenish June 30. Currency and coin. Are we increasing this? Oh, I see. Sorry. Okay, so it does tell us currency and coin totaled $21 at the time. So that does tell us, like, if we had, yeah, interesting. If we had the beginning starting point of 250, and then we look in there and it shows $21, that means the difference between that, between 21 and 250, is 229. But we saw that we only had 226 showing in the sum of all these, and so we need somewhere there was an additional transaction that happened. Let's see, $3. So cash. Oh, we use this kind of miscellaneous account. Oh, see, that's annoying. So cash over and short then becomes the middle account because it's alphabetical order. That's goofy, but I guess that helps us figure all the pieces out. Supplies expense. And then we're also going to increase the petty cash fund at the same time up to 290. So that was 3. And then we're going to go through and just, advertising's good. 56.48. So I'm just putting all these in. Did supplies expense? Oh, 63. It's weird how it looks a little. Oh, maybe just because I didn't check it. And then petty cash is going to go up by $40 from 250 to 290. Oh, geez. This is really annoying with the alphabetical order. Petty cash, then the postage supply. So I'm just getting this messed up because I didn't have it in perfect alphabetical order, and then supplies expense. Okay, petty cash is 40, postage expense 29.11, and supplies expense is 63.07. Oh, and then the sum of all these things in is not 220. So that was 226 plus 3 plus 40. So 269, I believe this comes out to. Okay, so then, yeah. All right, that one was a little annoying, just because you had to have them in alphabetical order. That's throwing me off. And then usually you do a separate entry to replenish the fund, but they did it in the same entry together. So that's, this part where you say petty cash. And then the cash over and short part is where you have to look at the sum of all the actual, receipts in the box. Then you need to look at what the beginning balance was and the ending balance. And if the total that you can see as receipts doesn't get you from beginning to ending, then there's some unreconciled amount that we don't know what happened. Somebody made a mistake or something. And so that's where you use this cash over and short account to plug that difference to make it actually work. So a little tricky, but we got there. Okay, another petty cash problem. So on May 20th, we established a $325 petty cash fund. So let's just do that first. Okay. Then at the end of the month, we analyze all the transactions. Okay, so let's think about this here. So it was a $325 fund. When we look in the box, there's $108 remaining, which means that $217 is been used out of the fund. And then when we look at the receipts, we see 98 and 106. And so 325. Yeah, 108 is remaining. There's 2 receipts, 98 and 106. So if we compare the difference between those, there's $13. So 98 and 106 is only 204. So it's not the 217. So 217 is the difference between 325 and the remaining balance, the beginning and the ending. The 2 receipts added together totals to And sorry, the difference between the 325 and the 108 is 217. But if we look at the two, so again, 217. When we look at the two receipts together, it's only 204. And so we need $13 of miscellaneous that we don't know what happened to get us to the total 217 difference between the beginning and the ending balance when we're replenishing. Okay, so we know it's cash that we use to replenish. And yeah, again, in alphabetical order. So we had what is this? Petty cash box receipt. Oh, entertainment and travel. And then we're going to need cash over and short. Let's see if we can get this right with the alphabetical order. Okay, so cash over and short is 13. And then the entertainment receipt is 98. And then 106 for travel. That should get us the 217 we wanted. And then we're going to increase by $50. So that's, again, just that same transaction. All right, we got it all in there. Alphabetical order the first time. That's great. Okay, let's move on to the last homework problem here. Question number 9. And in question number 9, it says on May 1st, we set up a petty cash fund for $325, and then it contains these items. Okay, so I'm gonna actually, what would be easier is copy this into I have an Excel spreadsheet off to the side. So I'm just gonna paste those in. Okay, so we have cash on hand of 123. So our beginning cash was 325. What was 325? And then we say we go open the box, and there's 123 left. So the difference, how much cash was actually used, is $202. So 325 minus 123 is 202. So the difference between those 202. But here's all the receipts we have. So let's see if that adds up to the difference of 202. And if it doesn't, we need to do a cash over or in short. Over short in this instance. So if we add up all of the actual receipt amounts, it's 189. So these all added together equal 189. So not the 202 we need. So we have $3 extra. Oh no, wait. Is that 13? Yeah, it's 13. $13 of unaccounted for. So cash is short by $13 is what we're saying. Make sure I got that in there right. Yeah. So then we're just going to do our journal entries. We're going to replenish. And again, we're going to do office supplies, delivery charges. I'm thinking about the alphabetical order here. Travel expense, advertising. So advertising is going to be first. 70. And then what other expenses do we have? And the next thing I think is going to be our cash over and short. ABC delivery charge, D20. And we've got travel, stamps, and we already had the average, so ST, right? Oh, what are we missing something? Office. Oh, office supplies. I guess that should be next. OST. So office supplies was 37. Stamps was 20. And travel expense was 42. All those together should be 202. And let's check ourselves. What happened there? Oh, I've got those backwards. Geez, you guys. I always think when I make those mistakes, I'm sure you guys see that when I'm doing it. It's kind of embarrassing I don't recognize it until the end. So, whoopsie. But yeah, those are just backwards, right? We're taking cash out of our normal cash account, putting it into the petty cash account. So they're both assets. Credit goes down, debit increases for assets. And so that is good. Cool. All right. Well, that is all of the homework problems, and I hope you all found that helpful. I think the trickiest thing on here, I mean, the bank recs are just kind of a process of learning all the reconciling items, but the trickiest thing I think on the petty cash problems is just coming up with that cash over or short. So practice that. Make sure you understand how we got there, and just one more time on this, how you do get there. You know, this is your beginning balance, essentially what you started with. This is what you ended with. And so you got to take the difference between those two to see how much cash was used up. In this instance, the difference between these two is 202. And then here's all the receipts we have showing what cash was used for. But for some reason, we don't really know why, but the total of these amounts add up to 189 instead of the 202 that we need to get the full difference. And so we kind of do this plug account to just account for the difference. It's just cash over short. We don't know what happened necessarily, but for some reason the cash is short by $13. So somebody basically took money out of the box and didn't leave a receipt is essentially what we're saying. So yeah, not a great thing. I mean, you want to kind of limit those or watch that. Could be the indication of somebody stealing money, you know, an employee or something, possibly. But it also could just be an honest mistake, or like I said, forgot to put a receipt back in the box or something like that. But yeah, thanks everybody. Hopefully that helped, and I will talk to y'all soon. Have a great one.